All right, welcome to The Explainer. Today we're diving into this hidden cognitive trap that gets pretty much everyone. I'm talking Wall Street traders, astrophysicists, you name it. It's this super subtle error in our thinking that can make even the most brilliant ideas just completely shatter the second they hit the real world.
So what do these things have in common? A perfect trading strategy, finding a new planet, a huge scientific breakthrough? I mean, they seem totally unrelated, right? But the thing is, they're all incredibly vulnerable to the exact same fundamental mistake in how we go looking for the truth. They all start with a really promising pattern, this flash of insight that looks, for all the world, like a genuine discovery.
And that's the trap. It's a mistake that our brains, which are basically pattern-seeking machines, are totally wired to make. And it's what causes something that looks like a sure thing on paper to just collapse the moment it has to face reality. So let's call this what it is, the pattern-seeking trap. And you can see it spring shut in these three really different, super high-stakes fields, where you get these stories that start with so much promise and just end in total disillusionment.
I mean, just think about it for a second. You've got the quant trader with a beautiful backtest on a strategy that just dies the second it goes live. Or the PhD student who pours years of their life into a project only to find out, nope, the results can't be replicated. And then there are the astronomers who thought they'd found new planets in the M22 star cluster, only to realize that signal was just cosmic rays hitting their equipment. You see? In every single case, the outcome is the same. What looked like a crystal clear signal was really just noise.
So what's the villain behind all these illusions? Well, this cognitive ghost actually has a name. And you know, understanding it is the absolute first step to beating it. It's called the multiple hypothesis bias. Now, the really dangerous part about this is that it feels scientific. I mean, you're testing variables, you're looking at data, running correlations. It all seems legit. But the more things you test, the more features you try out, the more parameters you tweak, the higher the chance you're going to find a pattern purely by accident. So you think you're doing this rigorous science, but what you're really doing is just getting lucky.
And this quote just nails the paradox perfectly. The very act of searching harder, of testing more and more ideas, actually makes us more likely to find a false answer. We end up validating pure randomness, and then we mistake it for actual skill. So, instead of finding a real, repeatable edge, you've just stumbled upon the one random combination that happened to look good in your specific data set. You've been chasing a statistical ghost, and you thought it was a real signal.
Okay, so how in the world do we escape this trap? If testing more and using stricter statistics isn't the answer, then what is? Well, the solution isn't to look harder at the results. It's to build a way better, much more disciplined process for coming up with ideas in the first place.
What this means is we have to stop chasing these shiny, perfect-looking results. You know those amazing performance curves? Instead, we have to focus all our energy on building a really robust system for how we produce, document, and check our ideas before we even start looking for that home run.
So, for example, quantitative researchers use a four-stage pipeline that looks a lot like this. Each one of these stages acts like a filter, right? It takes away the freedom to just mess around until you find something that fits. It forces discipline. By making sure your data is clean, by justifying the logic of an idea before you test it, and then confirming it in real-world conditions, well, you pretty much eliminate 80% of the potential for fooling yourself before you even run a single test.
And this illustrates a universal truth. The principles of a good solid process are the same. It doesn't matter if you're trading stocks, studying cells, or mapping the stars.
I mean, just look at how these three core principles pop up across completely different fields. First, you observe the world without trying to immediately exploit it. Second, you justify the logic behind your idea, like why should this pattern even exist in the first place? And third, you rigorously test that idea by throwing it into new environments to see if it breaks. Does the signal work on other stocks? Can the experiment be repeated with a different telescope? This is how you build something that actually lasts.
So, when it's all said and done, this really boils down to a fundamental choice between two very different mindsets, right? Two totally different ways of approaching discovery. So you have to ask yourself, are you just engaging in what is basically guesswork? You know, hunting for an impressive-looking result that's actually super fragile and probably going to fail? Or are you following a structured, disciplined process that's designed to discover a repeatable signal, something that's built from the ground up to be tough and robust?
And that's the real difference here. It's the difference between a fragile idea that you have to protect in a vacuum and a robust one that can actually survive out in the real world. The true sign of a valuable discovery isn't some perfect-looking result. It's having a process that builds something strong enough to face reality.
So think about it. Whether it's in your career, your investments, or even just how you learn new things, this is a trap we can all fall into. But applying a structured, disciplined process, observing first, justifying your logic, and then testing your ideas like crazy, that is the single best defense you have against fooling yourself.